All right, what's up, everyone? In today's video, we're going to be doing another discussion about bonds, more specifically bond ETFs. Now, the reason being is because the Fed has essentially signaled at the most recent Jackson Hole meeting that they are going to start cutting rates in September. Now, if you're not familiar with bonds and how bonds work, as rates go up, okay, bonds prices go down. And if rates start to go down, as the Fed has signaled they are going to do, well, then bond prices go up. There's not much complications behind it. Things can get a little bit more complicated, but essentially, that is it. That is the main mechanism of bonds. So now they are very attractive. Okay. If the Fed is going to start cutting rates, as they signaled they are, then these bond funds would theoretically go up in price if the Fed cuts rates. So I've already done a video on TLT and also showed some charts here recently in one of my latest YouTube videos. But there are other bond funds besides TLT. In today's video, we're going to take a look at the LQD versus JNK. Now, LQD is going to be liquid investment grade index, and then the JNK is a high yield, very liquid index. Okay, basically, you've got your really good corporate bonds, all right, and then you've got your junk bonds. Okay, when you hear people talking about junk bonds, JNK is an ETF that basically represents that. All right. Now, we'll go ahead and go over the basics of what LQD and JNK are. We'll take a look at their performance, and then we'll break down the costs associated with them. Okay. There are differences in things like the expense ratio. We'll take a look at some of the top holdings. All right. And then we'll go over some more of the differences between them when it comes to the different sectors. And the maturity life, you'll see that there are some big differences in a couple areas between LQD and JNK. Now, both of the charts look very similar. Okay. They both had kind of this double bottom kind of forming here. And then we had this nice little base formation. And you can see last Friday, both of them have broken out. So they look really attractive on a technical perspective way. They look, attractive from a dividend yield perspective. And they also are attractive on the fact that the Fed has signaled they're going to start cutting rates. So we're going to break down all of these real quick in today's video. It'll be a good one. Be sure to smash that like button, subscribe to the channel for more. But as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through that disclaimer. If you're new to the channel, I started a completely free newsletter for you guys. It's called Investment Intelligence. I give out free, valuable finance and trading content, and I also try to sprinkle in some free trade ideas in there as well. There is a website, so you can go back and read some of the previous articles, right? Is this something that I want sent to me? And you can make that choice for yourself and subscribe to that so you can get them in your email. You can also join the Investment Intelligence Trading Group. That's where you get access to all my trading ideas, all the different tools and resources I have available. And I'm letting people join for just $1 right now for their first month using that promo code SUMMER. Now in there, you get 20 plus swing trade ideas every week, custom scripts and indicators, exclusive intel, exclusive chart layouts. These are from two of the new products that I just launched. You see massive profits on here. These are options, okay? What I did is I recently launched the Pulse Radar, all right, which is a short-term swing trade list, and then the Zone Finder, which is an intraday to swing trade list. These are actionable, tools that are meant to give you guys lists of stocks and setups to trade, right, that are ready to long or short. They all have weekly option expirations, meaning that the option chain is relatively liquid. So you guys can get into options on these plays there as well. And as you guys saw, the results have been really amazing in the first 2 weeks. I even put the debut of the Zone Finder. I put the first trade idea from the Zone Finder into the newsletter. That was Bristol Myers, and take a look at these massive gains that we saw. So join the Discord. Okay, the link is in the description. The Zone Finder and Pulse Radar are going to be available as separate products here coming in the soon future. But for now, you can get those included, bundled in with the Discord package. Now, if we take a look, LQD is from BlackRock, okay? JNK is from State Street. Now, I'm sure you've all heard the saying that, there's three companies that really rule the world, that control the world. It's BlackRock, it's State Street, and it's Vanguard. They pretty much own a majority of the assets globally, right? So no surprise that these ETFs are issued by them. Now, LQD only has an expense ratio of 0.14%. JNK has an expense ratio of 0.4%. So the expense ratio is a little bit higher on JNK. What that means is that's basically a percentage that you would be paying, okay? If you were to hold these for a year, that's the expense ratio that you would be paying. Now, let's take a look at our performance here, okay? And over the past 10 years, we can see that the results have been very similar, right? 2.63% versus 3.26%. All right. But when you take a look at the past 1 month, and the past 3 months and year to date, you can see that all of these are green. Now, it has been a bull market, at the time of this recording. So the S&P 500 is up double digits. The NASDAQ 100 is up double digits. So these performances aren't really anything amazing, right? Or stellar when compared to the other market. But you have to remember the Fed also has not cut rates, right? We went into the beginning of 2024 expecting a large amount of rate cuts, and here we are in late August, and we're just now being signaled by the Fed that they're going to start the Fed rate cut policy. All right. So what I really want to go over here is you can see LQD does have a little bit of a better performance, on this chart right here, and JNK is going to be the darker line. Okay. My main thing, all right, that I really want to get into is going to be some of the holdings. Okay. Now, again, here's the expense ratio. All right. These are the costs associated with it. All right. You can take screenshots of this info. LQD has a much larger daily volume than something like JNK. And if we take a look at the holdings here, we can see the top 10 holdings are going to be bonds from Goldman Sachs, AbbVie, Anheuser-Busch, CVS, Wells Fargo, AT&T, T-Mobile, Pfizer, and Boeing. Okay, so these are much more high quality grade companies than something like JNK, right? They've got DirecTV in here. They've got Venture Global, Hub International, Mozart Debt Merger, Tibco. They've got Unity. They've got American Airlines, Cloud Software. When you really dive into the different sectors, here's what you can see is you can see that they both are very heavy in finance specifically, right? Of course, finance is there. And we can see LQD has a larger chunk, okay, allocated to finance. Things really start to switch up once you come down here to consumer services, right? In consumer services, we see JNK has a much larger percentage of its allocation. Industrial services, energy, minerals, these are where things start to change up, all right, from LQD having the higher percentage allocation in the other sectors, right? We've got health technology, electronic technology, communications, consumer non-durables, and the retail trade. That is where we see LQD has more, a larger percentage of its allocation. Now, the dates, the maturity life, okay, this is also where we start to see some larger discrepancies. LQD has almost 30% over 20 years, right? 20-year bonds. JNK has almost 50% in 3 to 5 years. So more intermediate, right? They would call these more of long-term, more of these intermediary. And then when you go in short-term, JNK also has a larger percentage of allocation from 0 to 1 to 1 to 2 and 2 to 3 years. You can see that JNK is the larger one. Now, the Fed fund rate typically affects shorter term duration, shorter maturity yields. All right. So they like to say that, the 10-year treasury yield is basically ran by the markets and, is a pulse on the economy. Is controlled by the economy essentially, and they like to say that like the 2-year yield is controlled by the Fed and the Federal Reserve. So if you take that into perspective, something that's holding shorter term duration could potentially move faster during a Fed rate cut cycle, especially depending on how aggressive the Fed rate cut cycle is, which of course we do not know yet, right? You can see that basically a large chunk of their allocation is between the 0 to 3 years and 3 to 5 years for JNK. And then most of the maturity for LQD is going to be here in 7 to 10 years, 20 plus years, 3 to 5 years, 5 to 7 years, 15 to 20 years, 10 to 15, right? So, that's another big difference in between LQD and JNK is going to be the maturity. Now, as I mentioned, the charts look very similar, okay? And there is a good reason for that. And it's because, we're getting a signal from the Fed, all right, about the rate cut policy. So I think that both of these charts look great. In 2023, these were the chart patterns that you wanted to buy in many of the technology stocks, right? And many of the semiconductor stocks and many of the AI plays, right? And as the stock market bottomed and concluded its bear market in October of 2022, this is what a lot of really good technology and really a lot of the leading stocks, right, that have been the biggest performers right now over the past year, 2 years. These are what their bases look like, right? And they looked really good. We're seeing a base on a base, right? What I mean by that is, we've got the double bottom base, right, that we talked about in both of these. And now most recently had some consolidation, formed another base, and all of these are breaking their base breakout levels. So I would look for these to continue doing so. You still can get an attractive yield on many of these as well. So I do think that these are some things you guys want to consider, adding to a portfolio. Now, of course, whether or not you want to get into LQD, whether or not you want to get into something like JNK, whether or not you want to get into something like TLT or HYG, there's many different ways to gain exposure to the bond market via ETFs. You can get into treasuries, you can get into bonds themselves, not through ETFs. And of course, there's always going to be risk associated with everything, right? If something were to happen and the Fed was to, flip flop essentially and not start cutting rates or perhaps even start raising rates, you're going to see these things drop really, really hard. Okay. TLT had a nickname for the past few years, the living tombstone, right? TLT, the living tombstone, because those things have just been dead. I mean, especially when you look at the opportunity cost for a lot of these things, there's always going to be risk associated, right? I mean, for 2 years, these stocks are still in a downtrend for 2, 3 years and have not been able to break out, from their downtrends. Really, if you notice, they're all still making highs, lower highs, right? Highs, lower highs, until we really start to take out some of these 2022, 2023 levels in these bond ETFs. They haven't really broken out from making these lower highs, right? We need to start seeing that change and need to start making some highs and higher highs on some of these larger time frames, right? Shorter term, we can see that, we've got highs, and higher highs, but over the long run, there's been lots of opportunity cost if you've been held up in these. And it's been, pretty painful for a lot of people expecting the Fed to, cut rates, back last year, right? In 2023, people were, trying to say that the Fed was going to cut rates. So always do your own due diligence. But, these are some things that are definitely on my radar, especially for, some trades and, the options trades, as well as, getting into these with some shares. You can collect a nice little dividend there as well. Now, that's going to wrap up today's video. Don't forget to sign up for that newsletter. It's completely free. You can check out the website, see if it's something that you guys want to sign up for, and get those sent directly to your email inbox. And don't forget, you can also get into the Investment Intelligence private trading group. Using that promo code SUMMER will get you in for just $1 for your first month. Okay, so there's a link in the description to join that. Inside of there, you get 20 plus swing trade ideas every week, custom scripts and indicators, exclusive intel, exclusive chart layouts, and you also, for a limited time, okay, until September starts, the people who join are going to have access to the Pulse Radar and the Zone Finder, and I have a third product that I'm about to launch in there as well, the Compression Hunter. And you guys will gain access to this list right here. You'll gain access to the scan. You'll gain access to the custom scripts and indicators associated with those scans. So not only can you guys run the scans on your own, but you'll also be able to, have the charts and the supply and demand zones, the buy and sell signals directly on your screen there as well. Okay, and in there, I'll be, doing technical analysis, posting, the setups and what I'm looking for in each one of these different categories. I've even got them set up for perma bears too. So if you want zone finder shorts and pulse radar shorts, there's always going to be actionable trade ideas. Okay. And this was the very first trade from the zone finder was just absolutely amazing. And this is what I created it for, right? Was to be able to find stocks, that have liquid enough options for you to get into option trades on them. All right, you can see this one was in a demand zone, in a falling wedge, okay, and we got an explosive breakout, and that breakout led to over 200% gains on the weekly call options and over 70% gains on the monthly call options. So really, really nice stuff. Very excited to see what is going to continue to come. Now, if you ever want to do a coaching session or you want to do a one-on-one private session, use my Ko-Fi page. Okay, there's a link in the description in there. You can go ahead and click on the commissions tab right over here, and you can book a 30-minute or a 1-hour session directly through the Ko-Fi page. There's also this buy a coffee button, basically a way to leave a tip or donation for all the free valuable content I put out, such as the newsletter and these YouTube videos. Thanks again for watching. I really appreciate it. Don't forget to subscribe. Okay, help me get to 10K. We're just there. We're just now at that 9,000 subscriber count. Trying to get to 10K by the end of the year, if not sooner.